Hi friends, this is Neeraj here, and in today's video I would like to explain the deal which is happened today between Facebook of USA and Reliance Industries of India. So as per the deal, Facebook will be investing $5.8 billion in Reliance Jio, which is the 100% subsidiary of Reliance Industries, and picking up 9.9% stake. So this translates into valuation of Reliance Jio platform to around $60 billion at the current exchange rate of 75 rupees against dollar. So what does it mean for Facebook, and what does it mean for Reliance? For Facebook, it definitely is that India is the largest user base of Facebook, and it consolidates its own position in this largest growing digital market in the world. And for Facebook also, this $5 billion, around $5.8 billion, is it's even less than 1% of its market cap. And for Reliance, what does it mean is that for Reliance, I will give you a little background about what is Reliance Digital, what is Reliance Jio and Reliance Industries. Basically, Reliance Jio is the digital platform, mobile service provider and digital service provider, which is the 100% subsidiary of Reliance Industries. Reliance Industries is the listed company, and Reliance Industry is into oil and gas and petrochemicals business. So if you now look at the Reliance Jio, even though it is growing at a very fast pace, and the valuation of this Reliance Jio, which is given by Facebook, of $60 billion, and if you look at the today's current market cap of Reliance Industries, it is around $115 billion. So this is more than 50%, or almost 51% of the Reliance Industries valuation is coming from this. They have valued Reliance Jio as a 50% of the valuation of the total Reliance Industries valuation. So now what is the truth behind, or what is the reality behind this, is that, as you know, that Reliance Industries is into oil and gas business, and oil and gas, the way it is happening because of this coronavirus pandemic, all over the world the economic activities have shut, and there is demand has destroyed for this oil and gas, and which you have seen in last 2 months, that oil prices have crashed. Even in USA it has gone to zero and negative, and but now it's Brent is hovering at around $18 and $20 per barrel, from more than $50 2 months before. And Reliance was already in talks with since last 1 year with the Saudi Aramco to sell about 20% stake in the company, because Reliance Industries has a huge debt on its books of about net debt of about $23 billion. Okay, and with selling of or the discussion about selling 20% stake will translate into 18 to $20 billion for Reliance Industries. So with Saudi Aramco, they were in talks. So the Saudi Aramco pick up that much stake, and Reliance get that much money, and that way they reduce their debt on the books. But because of this sudden crash in the oil and gas demand and oil and gas prices, even Saudi Aramco is in great trouble, and that is the reason all this discussion and talks have been just called off, and deal didn't happen. So any case, Reliance also being in oil and gas, they are also in trouble because of this crash, and they were looking for this some kind of investment partners, and that is where the Facebook came. And if you look at the overall picture, what is happening is that Reliance has made profit of around $5 billion last year, and EBITDA of around $13 billion. And now with this crash in oil and gas prices by even more than 50%, so even if you take that all this profitability and EBITDA will decline by 50%, and depreciation and everything, and the capex is what their ongoing capex is continuing, Reliance will have very great difficulty in sustaining this capex across Reliance Retail, Reliance Digital, that is Reliance Jio, and also in its oil and gas business. To sustain that capex, or to even continue to having the business operations, they will need cash, and that is the reason this deal, that $5.8 billion what has come, it is a great relief for Reliance. Now for the future, And if you compare this valuation with this other existing mobile service provider companies in India, which is Bharti Airtel and Vodafone. So just to give you an example is that this translates into valuation of 150 subscribers, $150 per subscriber for Reliance Jio, and at current market cap, this Bharti Airtel translates into $26 per $91 per subscriber, and Vodafone Idea is only $5 per subscriber. So there's a huge valuation gap between Bharti Airtel and Reliance, also because of this futuristic probability of growth. But what is in terms of investors for Reliance Industries? I see that everybody will expect that Reliance Jio will be listed very soon, and unlock of great value of this digital platform of Reliance will happen, and it will benefit. But on the contrary, I believe that Reliance Industries will continue to keep it as a 100% subsidiary because of its own problems in its hardcore in this core business of oil and gas, because of this, and which these problems are not going to be gone in near term because of the continuing economic distress, which will take, in my view, at least 1 or 2 years minimum to come back to the same position. And oil and gas also will take around 1-2 years to come back to the position which was in 2019 and 2018. And that way, for this 2 years, the Reliance will need cash to sustain its operations and also to service its debt. And that is why this they will not be delisting, they will not be listing this Reliance Jio on the stock exchanges, and it will continue to remain as a subsidiary of Reliance Industries. So there will not be unlocking of value unless and until that oil and gas business also comes back to this higher profitability which was existing. So in my view, I don't think so. I see it as a great value addition for Reliance. Only thing it does is that it helps the ongoing current capex and the oil and gas business of Reliance Industries, the core business. That's it from my side. Thank you very much. And this is Neeraj here from Moscow. If you please like it, subscribe it, and share it with the maximum people. Thank you, and see you next week.